Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the economic bite by Omicron might be much worse than feared, even as recently as yesterday. Yesterday's warning on this weekend's US non-farm payrolls report may have been a timely one. Today, the precursor ADP employment report said US payrolls fell in their system by 300,000 in January on the Omicron impact. A gain of 200,000 was expected. The main cutbacks, that's half of them, were in the hospitality and leisure industries. But half the rest were declines in the logistics sector, vulnerable to the pandemic because they seem reluctant to accept the mask mandate. The estimated 150,000 gain in January in non-farm payrolls now looks far, far too optimistic. This news caused risk aversion in the bond markets, but the equity markets are still more focused on very good earnings reports coming through. Canadian building permits fell in December, and by more than expected. A 1.2% decline was expected by analysts, but in the end a 1.9% decline was reported. But at least it does come off a very strong November. Although China is on holiday, the latest IMF review of their economy notes it is unbalanced and needs fiscal support. It especially wants to see more social services spending. Meanwhile, the Chinese property market is off to a terrible start in January. Sales from the top 100 developers fell 40% year on year and are set to get worse in February. The EU's 5% December inflation rate was expected to ease back to 4.4% in January, but in fact it rose marginally to 5.1%, a record high and well above the ECB's target of 2%. However, their core inflation rate, that's without food or energy, did retreat to 2.3%, although not quite to the level expected of 1.9%. So there's real pressure on the ECB now to act on inflation. In Australia, the boss of the RBA was out explaining their current policy positions overnight. In informal remarks later, he conceded that rate hikes are possible there if wages growth rises. The US Treasury 10-year yield opens today at 1.75% and down 4 basis points. And the price of gold starts today at $1,809 an ounce and up another $6 from this time yesterday. And oil prices start today little change from yesterday at just on $87 a barrel in the US, while the international Brent price is now just over $88.50 a barrel. And the Kiwi dollar will open today little changed at 66.3 US cents. Against the Australian dollar, also little changed at a lower level of 93 Australian cents. But against the euro was softer at 58.6 euro cents. That means our trade weight index starts today at 70.8 and a small net slip. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.